Hello, folks. Brandon Chapman with you today. It's another edition of the TheoTrade video for Monday, May 5th. It's Cinco de Mayo, and man, I need some Mexican food. I need some chips and salsa. Anyway, we're gonna find some Mexican food today somewhere, but for the market, it was 9 days. 1, 2, 3, 4, 5, 6, 7, 8, 9 days up, the best streak in 20 years. And today it looks like we are going to finish down with just 20 minutes to go. And so I'm looking at this saying, okay, what's next? We had a 9-day rally. What's next? How able were you to benefit from 9 days, the best rally in 20 years, or most sustained rally day after day after day, market going up for 9 consecutive days? How were you able to benefit from this? What I have found is that, look, I mean, the fact of the matter is that the market has not been exactly just everything going up. If you're to look at, for example, take the RSP, this is the equal weight, and we'll take a ratio between the SPY. Well, what's outperforming, equal weight or the S&P 500? I'll just bring up the pairs ratio study here. What you'll see is that, again, we kind of peaked out here last March 11th, and overall the S&P's outperformed, meaning that fewer hands have benefited the most. If we look at the last 3 weeks, what sectors have led? You know, we have technology of 9%. Makes sense. That's the top, that's the most highest beta part of the market. 50% of the highest beta stocks in the S&P 500 are technology names. But has it been 100%? Has it been easy to pick? How's NVIDIA done? Well, NVIDIA hasn't rallied quite as much, has it? In fact, we had a couple of down days strewn in there. Microsoft. Well, did you trade over earnings? Did you hold Microsoft over earnings? Did you hold Meta over earnings? Were you willing to take those risks of overnight gaps? Because that's what it took to be able to make money during this entire rally. In fact, we go back to the SPX here. You'll notice there was a gap back here. How ready were you on some of those announcements to jump on board and play this out? If you waited for it to take out the highs, you're in here, and we might give this back tomorrow. This huge bounce back here, for example, off of our lows, massive rally. It took basically a few weeks for us to get back above that level again, above that high. And really, if you've waited for some confirmation, it's been hard to capture the upside or all of it. We could easily turn down tomorrow and wipe out any sort of gains you think you might have had. Unless what? Unless you guess you held Microsoft over earnings. Oops. Unless you held Microsoft. Right? Just so I could type it incorrectly. You can hold unless you're holding Microsoft. Again, huge gap there, right? That contributed a lot to the market, right? Meta's earnings gapping up contributed a lot. Apple. Well, what if you chose Apple? Well, you've given up all the 9 days gains. What if you chose Amazon? Well, Amazon, you really haven't made anything. Maybe you got in on the gap here, for example. Again, you're not up a lot. So depending on what you bought depends on how well you did. It's not as broad-based as it might seem. So again, yes, in the last 3 weeks, if you bought financials, did you buy banks ahead of their earnings announcements? Did you buy on the gap here? We could easily turn down tomorrow unless you sold today. Did you sell today? Again, I'm asking a lot of questions because, again, the idea that somehow this 9-day rally is going to change everything for investors is probably not the right mindset. Okay, it has been very difficult to gauge direction in the last couple of months here, right? Yeah, back here, huge warning signs for a major move, but was the downside going to be 5% or was it going to be 20%? I guess if you plan on 5 to 10 and you wrote it for 20, it probably worked out okay. But then we've had this nice rip higher and we're sitting at a level. And right now, today, it looks like we might close at this level. This is a print from last week, last Friday. It was at 1.4 million shares of 565.65. And guess what? That's right around where we stand to just off it at the close. It was some resistance. We came back around. We broke through it as support, resistance then. And now we're kind of waiting below this level. If we're going to be below this level, this does create kind of an inherent bearish bias creating a resistance level. We closed below yesterday's low. We may see further downside movement. Now, gold's up today. So if we go to percent change for today, gold's up 3.17%, getting goosed here late in the session. So, for example, I've been long gold, I've been long silver. I didn't take my profits back here. And this has been a source of frustration. I have several of these trades where if I had one more day, I would have hit my profit objectives. And all of a sudden we gap up and sell off. Boom. It is frustrating to see that happen. Then we're seeing this kind of falling wedge formation, the 50% retracement. We're bouncing back around and we're finally green again after being up well over 100% back here. That's hard to weather, right? That's hard to see that go away. Some people today in chat talking about, oh man, they're only on the bearish end. How can you only be on the bearish end in this market? Or bullish end, by the way, right? Because if all you are is bullish here, if we drop to 5,500 tomorrow, are you going to sell? Are you going to be profitable if we drop to 5,500 tomorrow in the S&P 500? It's possible we could get there, right? It's a 3% move. Is it impossible? No, it's not. It's also level of support. Are you prepared to take profits here or losses if we get to 55 and you're exclusively bullish? My thought process on the market right now is kind of a whack-a-mole approach, right? Play it right now. You're probably looking at the bearish side. Down here, you're looking at the bullish side. I would have loved to have had one more down day here, one more up day here in many respects, and this would have been a stellar last month. Instead, it's just been okay. Profitable. We'll see how things play out in the next 40-something days, but we just missed things by one day. One day. But that's the type of market we're in, right? You better be adding bearish positions into big moves. You better be adding bullish positions into large moves down. You better be playing both sides of the market and trying to benefit and giving yourself just enough time. In this case, maybe right now, June gives you 46 days, just in case you're wrong, to be right. Be wrong in the short term, but be right in the next 46 days. A lot can happen. We could see some wild swings out of this. We might go to 6,100. Probably not likely, but we may only pull back to 54. So if you put bearish positions on back here, a move to 54 doesn't make you profitable. So you may have to add more up here to go bearish. But what if we break out? You better be in a position to start to add bullish trades and going the other direction as well. You've got to find a way to make money in these big moves. It's not easy, but you've got to be on top of it. And again, into the sell-off down here, or maybe the breakout here, getting along the market, into the buying here, getting bearish, getting bullish, getting bearish. We've got to be able to be adaptable in this market and playing both sides so we can find a way to make money. And then once we get the move, have a chance to lean into it and continue those gains. But right now, this has been a phenomenal move. The first down day in 9 sessions. This rally here does not tell us anything about the next 9 days. I hate to break it. I would love to say, hey, these 9 days mean that we are no longer going down. We're basically in a bull market again. Great. But that's not the reality. We still have significant amounts of event risk, dollars, bonds, etc. And gold breaking out today at 3.2%, outperforming the market the way that it did, and the S&P finishing 0.5% lower. That is not a sign of strength. That is a sign of weakness. And so are we going back to gold rallying and the S&P down, dollar down, bonds? What did bonds do today? Let's look at TLT. Bonds down. Energy, the worst performing sector. There were some bearish prints last week. I call them ghost prints, option trades in XLE and XLU last week, or energy and utilities. Is this the time to add a bearish trade in utilities and look for downside move to 76? Doesn't seem like a bad opportunity to take that. If you do not have bearish trades, you probably need to look to add some here. If the market goes higher, yeah, your bullish trades may play out. But what if the market turns down? Are you prepared for a market decline? That's the real question here. I walked through my session today as far as a bullish trade in gold, which isn't exactly a 100% bullish trade, meaning the market goes up, gold should go up. The reality is the market went up and gold went down. But gold breaking out today, we're looking at testing the prior highs, but that's up a little bit since we talked about it earlier in the day. So you've just got to be prepared right now to trade both directions. And right now, if you're loaded up to the gills on the bullish side, you might look for opportunities to take profits and or add some bearish opportunities. Again, energy, utilities in like pretty reasonable areas. And if bonds keep selling off, utilities, again, this may create pressure on what interest rate sensitive parts of the market, like utilities, like real estate. I mean, real estate's in nosebleed territory up here, right? Can we get a move lower? I need a move down here. Don't know if I'm going to get it. I've got 46 days for it to happen. I plan for the potential this may go against me, but we're going to remain volatile. But again, price is higher. This may create even a better opportunity to place a bearish trade. We'll have to see how things play out. But again, placing stuff at extremes, bearishly, bullishly, and closing out those gains as they move into range is really important. And I missed a couple. But hey, it's going to happen, right? This market is somewhat unpredictable. But again, if we can keep staggering our trades on both ends of the markets, we'll have both ends of the market. We'll have chances to close profitable, right? Right now, Ghost Prince, we've closed 8 profitable trades. We don't have any losing trades yet, but we got 42 days, 46 days until the rest of our trades expire. We're not going to lose on all 8 of them. We might lose on a few, though. We might make money off them. Who knows? We have time and we're ready to manage these trades as the market moves one direction or the other. And we're going to keep playing that. And right now, we're looking at trying to get bearish and taking some profits. We're going to see what happens tomorrow. But again, if you're all bullish right now, you got to look for some bearish opportunities. If you're all bearish, you better be ready on a break here to add some bullishness to your portfolio. Because what? You've got to be able to capitalize on that continuation if we're going to go to 612 or 6100 on the SPX. We just don't know what's going to happen. We're one news announcement away, one X post away from some move that we don't know. It could be from our government. It could be a foreign government. It could be corporations. We just don't know. And China right now, my goodness, are they holding up very, very well despite the fact very little is going on right now from a manufacturing perspective. You hear it in the markets. You hear it in news. I even know my brother's out there a lot. He's like, nothing is happening right now. Youth unemployment is like 50%. They're not reporting economic data. Don talked about it this morning. How are they up here? Well, again, is it going to last? Again, we just don't know where or when the next shoe is going to drop. We've just got to be prepared. We've got to be adaptable, and we can't be afraid of taking our bias and neutralizing it. And right now, if you're bearishly biased, or rather, if you're bullishly biased, you're probably neutralizing some of that bullish delta in lieu of a market decline. And that means taking profits and or putting on bearish trades. And if you've only been a bear throughout this entire 9 days, you better be prepared if we start to take out the highs here, 5,700, of trying to identify some opportunities. And that might even be today. Well, folks, that's the video for today. Again, gold up nicely. Again, I talked about during the session today, my session, talking about upside call spreads, talking for June, looking at testing recent highs. But wherever your bullishness lies in the market right now, or bearishness lies, again, you better be looking for opportunities to counter that and balance that delta out. And folks, that's all I got for today. We'll see you back next week. Thank you.